Topmost priority of everyone is taking care of near and dear ones. You need to plan ahead to fulfill the dreams of your family members. In the meantime, the dreams of your family should not be jeopardized if anything unfortunate happens to you. By keeping these objectives in mind, ICICI Pru is offering a product called ICICI Pru Smart Life. Will this plan help to shoulder your responsibilities? This video dives deep into the features and workings of ICICI Pru Smart Life. The research methodology part of this review analysis will provide you with insights and help you in your final decision making. Welcome to holisticinvestment.in. ICICI Pru Smart Life Plan is a savings and protection oriented unit linked life individual plan. The main features are flexibility of premium payment, single, limited or regular premium payment. Loyalty additions and wealth boosters are added to the fund value. Option to choose the level of protection that suits your needs. 2 investment strategies and 18 fund options are available. The policy continues even after the death of the policyholder, that is, it continues till the end of the policy term. Next, we shall look into the benefits of ICICI Pru Smart Life Plan. Death benefit. The death benefit is payable is split into 2 parts. Lump sum benefit, which is a higher of sum assured or minimum death benefit, is paid out at the time of claim. Next is the smart benefit, a deferred benefit that ensures the policy continues uninterrupted on subsequent premiums and due dates. Units equivalent to the installment premium will be allocated by the company itself. Next, maturity benefit. The fund value including top-up fund value is payable irrespective of the survival of assured. Next, loyalty addition, additional loyalty addition and wealth boosters are based on the policy term and the premium amount. Next, strategies and fund options under ICICI Pru Smart Life Plan. Fixed portfolio strategy. Under this strategy, you can choose to save your money in any of the following fund options in the proportion of your choice. You can switch your investment amount amongst these funds using the switch option. The asset allocation of each fund is given in the table. Under the fixed portfolio strategy, you also have the choice to opt for automatic transfer strategy. Next, life cycle based portfolio strategy. At the commencement of the policy, your investment will be based on your age, and it is distributed between 2 funds, namely multi-cap growth fund and income fund. As you move on from one age category to another, your funds depending on your current age get reallocated automatically. The age-wise portfolio distribution has been deposited in the table. Next, various charges under ICICI Pru Smart Life Plan. Premium allocation charge 3% for single pay and 2.5% for regular and limited pay. Fund management charge 1.35% for all funds except for the money market fund. 0.75% for money market fund. Policy administration charge, 1 pay, it is 60 rupees per month for the first 5 policy years. For limited or regular pay, 0.21% per month for the entire policy term. Next, mortality charges, it is calculated based on the sum at risk and age. Next, discontinuance charge, it depends on the policy year in which you discontinue and the premium amount you pay. Inference from these charges. The plan deducts these charges before investing your premium. Some of these charges continue throughout the policy term. Whereas in other market-linked products, the charges are less and the investment procedure is so transparent. These hefty charges in ULIP will affect your return in the long run. Next, we shall discuss the various advantages and disadvantages of ICICI Pru Smart Life. Advantages. The premium waiver option is an inbuilt feature. Under fixed portfolio strategy, you have the option to switch between the available funds. You can invest any surplus money as a top-up premium. You can change your portfolio strategy once every policy year. You can choose to decrease your sum assured and policy term. Disadvantages. The lock-in period is 5 years for surrendering or doing partial withdrawal. The plan doesn't provide loan. The fund options are not unique. There is an overlapping of the fund's investment strategy. We are now moving into an important segment, which is the internal rate of return calculation. Calculating the potential return of the plan should be done before choosing any investment product. This will help you to compare with other investment returns. Most investors just look at the cash flow, that is what goes in and goes out of your pocket. But apart from cash flow, you need to look for potential returns from the investment. Let us calculate the internal rate of return for ICICI Pru Smart Life Plan. A 35-year-old buys ICICI Pru Smart Life for a sum assured of rupees 15 lakhs. The policy term and the premium paying term are 15 years. The annual premium here is rupees 1 lakh. The illustration shows two different rates of assumed future investment return, that is 4% per annum and 8% per annum. These returns are not guaranteed and they are not upper or lower limit of what you might get back. The fund value at 4% scenario is 17.06 lakhs and the IRR under the 4% scenario works out to be 1.59%. The fund value at the 8% scenario is 23.85 lakhs and the IRR under the 8% scenario works out to be 5.60%. These returns are not on par with other market related instruments. Any long-term investment should yield more than the inflation rate. Here in ICICI Pru Smart Life Plan, the policy term is 15 years, but returns are not profitable. Even a bank FD fetches you better returns, which comes under the debt category. Now we are moving into the next segment. This segment throws light on how you can channel the premium effectively in an alternate investment. To compare the returns, let us take into account the same metric as seen in the above illustration. So, an annual investment of rupees 1 lakh can be utilized for life cover and investment. Before investing for wealth accumulation, let us set aside an amount for life insurance coverage. A pure term life insurance policy for rupees 15 lakh sum assured would cost rupees 7,200 per annum. This leaves you with rupees 92,800 for investment. Either you can invest in a market linked instrument or you can settle with a debt instrument. The choice could be based on your personal risk appetite. Here we have chosen two scenarios, PPF and ELSS. The final maturity value under PPF investment is rupees 25.16 lakhs. This is fully tax-free. The IRR for pure term life insurance policy along with PPF investment results in 6.23%. Under the ELSS fund, the redemption involves capital gains calculation. The calculation is given here. Pre-tax maturity value is 38.74 lakhs. Post-tax maturity value is 36.36 lakhs. And the IRR for pure term life insurance policy along with ELSS investment is 10.45%. This is a post-tax return. If you look at the IRR analysis, you could infer that even a debt instrument, that is PPF, yields better than ICICI Pru Smart Life. Any investment should earn you better risk-adjusted return. ICICI Pru Smart Life Plan doesn't yield you an appropriate risk-adjusted return. This IRR analysis shows the importance of the returns calculation before making the investment decision. Here is our final verdict on ICICI Pru Smart Life Plan. It offers life cover during the policy term and also ensures that the policy continues even after the death of the policyholder without any payment of future premium. There are 18 fund options under this plan. If you look at the asset allocation and risk profile of each of the fund, there is a repetition. This may result in confusing the investors. Unlike the mutual fund industry, there is no regulatory board to standardize the fund option for ULIPs. The potential return of ICICI Pru Smart Life Plan is not good enough to combat inflation in the long run. Your investment plan may fail to fulfill your dreams if you invest in ICICI Pru Smart Life. Get an adequate life cover through a pure term life insurance policy. They offer high coverage at an affordable premium. To achieve your dreams, always invest in a diversified portfolio. Anyone who has a solid financial plan can succeed. As an investor, you should thoroughly analyze the investment product and make informed decisions. It is always better to have a clear vision about your plans before you make any investment decision. If you need any guidance, then you can consult a certified financial planner. He will draft a solid financial plan based on your dreams, time horizon, and risk appetite. A detailed review of ICICI Pru Smart Life Plan is available as a blog post in our website. The link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.